this has been, it is also the beginning of the last quarter of the year, and it should give us, by looking at what's happening in the market, should give us some insight on how we're going to be setting ourselves for trades for the next quarter at least. So 1 second, there is somebody still trying to get in and it's just got 1 minute to go. Do you have the screen up, guys? Okay, so what we're going to do, we're going today look at a general look at the market as a whole. We're going to look at the currencies, we're going to look at the commodities, we're going to look at the stock indices, we're going to look at interest rate, we're going to look at everything that happened during the last quarter of this year, or the third quarter of the year, so that we can adjust ourselves for the coming quarter. This is usually the third quarter of the year, has always been or recognized as, or the latter part of the third quarter, we usually get a having said that, the first quarter of the first 3 weeks of October are usually characterized by weakness in the stock market, strength in the interest rate, or if you look strength in the bonds, if you will. This has been typical every year, and usually you would see that the stock indices like the S&P, for example, and the Dow Jones, they all falter during the month of October, and they usually set their bottoms or the low of the quarter usually at or around the option expiration of October, which is the third Friday, and which is about at or around October the 17th or the 19th, depending on the year. And you could see that from the crash of 1987, which they call the Black Monday, that was on October the 19th. We also had another crash on 1997, was October the 17th, and we also had a crash every October, usually towards the option expiration. You would see that the market is declining, and you can pretty much see it over here. Whenever you see there is an October, you see that there is a decline in the market. Every October, you see right here, this is the month of October, it settles down towards the low of October, and you can go back, and the big crash in October, you can see every October you can see that the market bottoms. October, you can line them up. Even in a bull market, you see that the market is declining, and this is the every October, as I'm showing you, you can see log out and come back in again. How about this now? Is this better, guys? Testing 1 2 3, testing 1 2 3. I mean, that's the best. We'll see that the stock indices usually bottom down, or we get the lows of the year, if you will, at or around the October of every year. And look at this. I mean, if you look at every October, you see that a low of the stock market just lines up on October of every year. And this has been, I mean, for the last 30 years, since the 80s, this has been one of the classics, or the classic cycles, if you will, of the stock market. Now, with this year coming into play, we can see that we're beginning now, in the 2011, we're beginning now to see the decline that we're having right now, or the weakness that we have right now in the stock market, and that is also, we're beginning to push. And if we break based upon on the Dow, if you will, if we break down, and we are sitting at it now, which is the 1120, around 123. We are, if we break this point right now, we should be looking for the push that we are going to get probably in the stock market. You could see that we have further weakness in the Nasdaq, and I'm showing you this because this will also help us in planning our trade for the currencies, because the market, if the money is going out from the stock market, it has to find a home. Money doesn't stay idle. Money works 24 hours a day, so money needs to find a home. So if people are trying to protect themselves and by exiting the stock market, they need to park their money somewhere, whether it's an individual investor or a hedge fund. So if we look at the Nasdaq, you can see that the Nasdaq has already broken the structure point at 2168, and now we are already have closed the week, and we are closing the week at 2134. So there is serious weakness coming in the stock market. You can see that that's the Nasdaq, that's the S&P. And if you look at the Dow Jones, the same thing with the Dow Jones. The Dow Jones has already broken the structure point at or about, we broke it, this is the second structure here that we broke at 1186, and even though with the last push that we had here as of the low of July, we were unable to trade higher or go back above the low that was set in March of this year, which is the 1155. We only just went above it for 2 days, and since then we are below. So now we are, as far as all the stock indices, we are pretty much in the beginning of the next leg down, and it is a bear market, believe it or not. That is the beginning of a bear market. Right there we have what we call a trend change. You got the structural failure, multiple failures to make a higher high. That is your structural failure. It broke the structure with momentum, and then it followed through below the second structure, which is the 1155, with further momentum. And for the last 3 months we have been unable to go back. We retested the structure points, but we were unable to close above it, and now we are treading to the downside. So as I showed you that we're having a big push to the downside on the indices, plus we have a seasonal low that usually comes into the stock indices towards the end of October, which is the third Friday of October, and that will probably be the peak or the low of the market, will be the low of the market or the peak of the acceleration to the downside. That means that the money has to go out. Now we need to know where the money is going, and that we need to find out where we're going to buy, because that's where the money is going, and we also want to find where we can sell, because also that's another way that to make money. So with that, if money is going out of the stocks, where are they going? Where is their home? They can park themselves in currencies, they can park themselves in commodities, or they can park themselves in bonds. So the first thing we're going to look at quickly, because it's the easiest, is the US Treasury bonds, and this is the 30-year, and moving in this major uptrend to the upside like you see here. That is an indication that a lot of money is coming into the bonds. People are buying bonds, and we're coming, as we have now the Operation Twist that is starting next week, that the Federal Reserve Bank is starting in the US an operation that what they call Operation Twist, and that means that they're going to buy the long end of the yield, or i.e. they're going to buy the 30-year bonds, and therefore this we can expect that there will be a lot of demand coming into bonds, and therefore that upward trend should be going higher. If you look at commodities, uh, commodities now is beginning to get into a major decline. And again, I want to show you something on our radar screen. Everything that's on our radar screen, and this is where based upon the rules of price behavior and how we identify and do our portfolio selection, you can see that you can see these everything is pretty much on the short side. Everything is being sold. The Australian dollar is being sold. The pound is being sold. That's the British pound. The Canadian is being sold. The euro is being sold. And from way back in early September, the Swiss franc is being sold. The only thing that's on a buy is the US dollar, the US Treasury, the Japanese yen. And then if we go into the commodities, starting from here, gold is being sold, copper is being sold out, silver is being sold, bean oil, the grains are being sold, corn, oatmeal, soybeans, soybean meal, wheat, corn, everything now is, and this is because they have also raised the margin and there is what we call long liquidation. So also money is going out of the commodities, and right now we do have a sell signal on them. Crude oil, energies, also we are on a short. It's trading at 78. That's the front month on the crude oil, and that means what? That means that all this money is going out of crude, commodities, going out of energy, going out of grains, going out of metals. It has to go and find itself a home. And by doing that, now we're going to find a home. And it's obvious, I mean, as much as you have been with us in the room before, most of you, the strongest now, or the thing that is breaking up in a major uptrend and has given us a trend change from the low, was the US dollar. And as most of you know, we have been long the US dollar since 76.13. Right now, this is the daily chart for the US dollar, and that was the break, as I said, from the 76.15 right there. Right when it broke this structural point, that was the beginning of the trend change in the US dollar, and it began an upward leg, and then it pushed up. It took the second structural point, which is the 76.95, trading above that. And here we had something which is quite interesting, because once you break a structural point and it comes back and tests the same structural point, which was the breakout on the upside, and it holds like this and begins to resume its direction to the upside, that is your confirmation that you are now in a bona fide upward trend. Upon taking the second momentum high, or the momentum high, I mean, that is the structure, that's the first leg of the trend, that is your momentum high right here. Now this is a classic, a beauty when you are analyzing the charts, because once you have a break above a structure and then it sets up a momentum high and then it pulls back and it sits upon that structural point, which is in this case the 76.95, it holds for a couple of days, or you got like a minor break, and then it continues. Your next confirmation of the trend is when the prices take out this second or the new momentum high that was set, and this, which is the 78.29. So right now, if this prices come and take out the 78.29, now you have your confirmation that the trend now to the upside is resuming, and you do have a bona fide trend. because as you all of you know that a trend is a series of higher highs. So right there, this is the first high, and once the price takes out this, now it is seeking and it's beginning to set and put in place the second high, and that was for us. I mean, most of the guys that trade with us here and know they themselves are long the U.S. dollar, and now it is pushing higher. Now it sets the second momentum high, and now it is pushing, like here it is going up to take out this high. Now it is pushing up and it's going to target to take this high, and therefore we should be looking at the dollar to trade or at about, I mean, the next reasonable zone towards the dollar now should be around the 82 level in the based on the index, and this means that, and that is confirmed by the money that's going out of the stock market and the money that's going out of the commodities. The only way that they can place it, they can place it in the US dollar. And if you look at the weekly chart for the dollar, you can see now quite evidently that now we are breaking, we're near the high. We have a reasonable closing at 79.75 and 79.075, and last week's high is 79.40, so we're only 30 basis points from the previous weekly high. So this is a very positive sign, and as I said, we should be looking for a continuation to the upside on the dollar. If we look at the next currency pair, and in this case we're going to look at the euro. If you recall from last week, and I have pointed this to you and to the rest of you while we were in the FX Street workshop last week, the euro has set up what you see right there in front of you is what we call the diamond formation. The diamond formation is a formation that must be preceded by a long trend, and then it begins to give us those series, a low, and then it pushes high, makes a lower low, and it comes up, and then you get this, you look like, you can see, like, I mean, if I put it like this, you might see it better. This is pretty much your diamond formation. Whenever there is that diamond formation, it is one of the most bearish chart patterns that you can see ever. And upon a break from the 142.47, which is the break from the diamond formation, that is the beginning of the bear trend or the downward trend, and we should be looking now for a continuation of the euro to retest the lows that has been set in November 2010. So in this case, this is a very weak a very weak setup. The euro looks extremely negative, and the only concern I have is that we pretty much closed near the low. The low of the week was 133.80, and our close is 133.80, so that is slightly worrisome, but we're still, nothing has changed. We're looking for a decline, and the next push down is on a trade below the 133. If it takes out the 133.57 based on the 59, based on 57, so based on the index, we should be going for a capitulation or a move towards the 131. So this, we are at a very sensitive juncture with regards to the euro right there. The other one you want to look at is the Canadian. This too is now considered in a bear market. one second, Kevin. You're always welcome to ask questions, Kevin. I'll be happy to answer them. Okay, so looking at the Canadian, it's the same thing. You can see that we have now been selling off. We're near the low of the day. We have a structural failure here and a trend change. So we're looking again for a continuation. So in this case, we can see that the Canadian is very weak. The euro is very weak. So I have two now that are extremely weak, the euro and the Canadian. If I look at the Aussie dollar, and the Aussie 2, upon a break of the 97.58, that is the beginning of the next downward leg, and we can consider the Aussie also beginning a downward move to the downside. And the key for us for the Aussie is we're looking at this low, which is around the 95.24, and that is about 50 pips away from where we are at this moment. So if it breaks below the 95.24, you're looking at a push all the way down to the 90.50. So you will get about a 400 basis point capitulation. So right now the weakest is the euro, followed by the Canadian. So let's go and do this here, so we like what we do every week. So this is how we set up our trades and do our trade plan. And what we are going to be planning today, we are going to see you all Monday morning, and we're going to be trading it together. So right now, the strongest currency that I have is the US dollar. The weakest currency that I have is the euro dollar. The second weakest currency, and again, when I have three dashes like this means that the number of dashes is an indication of the weakness. This is the way for me to decide visually which is the strongest and which is the weakest. So right now I have the euro and the CAD at the same level of weakness. They are followed by the Aussie, because the Aussie needs to break the 95.55 before now I have a break to the downside. Now I'm going to look at the British pound. Also, the British pound is on the weak side. It has broken the structural point, which is the 156.61, but we haven't had our capitulation yet. We had the first capitulation here back in September the 21st. Now we came back, we tested the 156.61, we were unable to close above it, so we are in bear territory, if you will. But for the last 3 sessions, or 4 sessions if you want, this is Friday, Thursday, Wednesday, Tuesday, and if you want to take, so the last 4 sessions for the British pounds were all or about in the same zone. So it is what we call an inside week. I mean, for the whole week, if you bought the dollar, you didn't really make any much money. If you sold the dollar, you didn't even lose much money. Either way, you did not get any follow through to the upside, nor did you get really any follow through to the downside. And having a close each week to close and or about the same area tells you that there isn't real decision with regards to the British pound. So if you look at this day, our close technically is 55.89. This one is 55.79, which is 10 pips away. The third day week is and Friday is 55.74. So for the 4 days we closed in a difference of 10-15 pips from each other. That tells you that this is a market which is pretty much non-decided in any direction to go. So it is oscillating between the highs and the lows and going nowhere. Therefore, if I'm going to go back to my chart and where I set up the hierarchy of strength and weakness, I'm going to say that the pound is not as weak as the rest, or the pound is I can't is not giving me a high probability trade. It's not giving me a big edge on my trade, so it's a kind of neutral. So I can focus on the euro, the CAD, and the Aussie. Then I'm going to take a look at the Swiss and the yen, so I can find out which way. Looking at the Swiss, this right now, we are in a bear leg as far as the Swiss franc goes. Again, the one thing you know, it is pretty much a manufactured kind of a decline. But manufactured or not, we are in a bear trend. We have closed the week pretty much near the low of the day, and so looking at that, the Swiss also is considered a weak pair, and I should be looking for a further decline on the Swiss, and you can see that on the weekly chart. And the next price target for us on the Swiss is around the 107.62. When I say a price target, I'm picking a significant point where the market is going to reach. So I'm looking for a similar behavior. Again, I'm not a believer of support and resistance and all this blah blah blah. This is the market is declining. It is going to reach an area where the market behaves in a similar way. These are the areas where the market has held. So we are going to look at that as a point where we can decide if it is behaving in the same way or is going to change and do something different. So we have, based on that, about 500 basis points to further decline on the Swiss. Last but not least is the Japanese yen. And this is a picture, guys, that is worth 1,000 words. As you can see, like this, with all we have, if you look at this chart, we are definitely in a bull market. We have been sitting near the all-time historical highs for the Japanese yen now since July of 2011. We're sitting around the 1.29 or the 130 level. This is our previous structure momentum high, and we have been sitting above it. Look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. 10 weeks. This currency has sat above the structure point of 129.85. Now take a mental picture of this quickly, and then I'm going to put the dollar for you. And the dollar, as I have mentioned, look at this move. This thing moved from 74 to close to 80. It moved about 600 or 700 basis points. That 700 basis point against, which is the dollar, which is the most lucrative or the most liquid currency, and all what you get on the yen is this. And what you see there is a chart representation or a picture representation or of how you can identify a chart or an instrument that is technically strong and identifying an instrument that is fundamentally strong. That currency, the Japanese yen, that chart that you see in the Japanese yen is a way to that shows you that this is a currency that is strong, that everybody wants to buy it, and it's not being deterred by the rise of the US dollar, and it is holding itself strong versus the other currencies, which is the Aussie, the CAD, and the British pound. So based upon that, if we are going to be looking at the market going forward, or we're looking at the next quarter, we're looking at the next 3 months, we have a seasonal pattern of a decline in the stock market towards the end of October. Then we have another seasonal pattern of the stock market turning around and pushing higher in the beginning of November, and that means you're going into what they call in the United States the first Monday after Thanksgiving, which is the Black Monday, which is the beginning of the Christmas season, and of course we get the Santa Claus rally towards the end of the new year, where the stock market goes up. So based upon that, we're looking now for the month of October to have a decline in the stocks indices, and that means also we're having liquidation in commodities. That means that for the next month or so we should be looking at strength in the US dollar, and this means that when the dollar is going up, we are buying it. If it's turning around like this and I get a decline like this, I do not falter, I do not go out. On the contrary, this is where I'm going to add to my position, and this is the one case where buying low and selling high makes sense. You're buying low because it was preceded by an upward move. Now you can look at any pullback in the dollar as a buying opportunity, and you're going to try to identify a selling point. So the way we're going to do that, we're going to be looking at going long the dollar, short the euro, long the dollar, and we can short the Canadian. We can go long the dollar and short the Aussie. We can go long and short the Swiss franc. The Swiss is also as weak as the euro because it's pretty much pegged to the euro. So now if the euro comes down, it pulls with it. Remember, the Swiss National Bank pegged it to the euro. So if the euro is coming down, okay, and this is linked to this, it is going to pull this down with it. So I'm looking at long the dollar, short the euro, short the Swiss, and I'm also going to be long and short the Canadian, and the Canadian is as weak as them. My second choice would be the Aussie, and last one to short against the dollar would be the British pound. I can also go short the euro pound. I can go short the euro CAD. I can go short the euro Aussie. I can go long the pound Swiss. And I can go also long the pound CAD. And last but not least, the pound Aussie. So these are the ones we're going to be focusing on. We're going to be buying the dollar, selling the Swiss franc, selling the Canadian, selling the euro, and selling the Aussie. Okay? These are the four pairs against the dollar. Against the pound, I'm going to be selling the euro, selling the Swiss. So going long the pound Swiss, going long the pound CAD, and going long the pound Aussie. Okay? And this will be the plan for the next week. Now, having said that, and this is our plan, now we are going to explain to you how we trade and how we're going to use this information come Monday morning. Okay? The way we're going to do this is that we're going to plan our entry and where we're going to go long and where we are going to go short. And we're going to, this is what we have as part of our software that we trade. And if what we start, we begin to enter what we call, and I'm going to do this for every single one of for them shortly. We're going to enter what we call a long point and a short point. A long point means this is where we buy. A short point means this is where we sell if it comes below it. A structure long, this means when I have a trend change or a breakout to the upside, then I'm going to be a buyer. And my structure short, let me show you. This means if I have a trend change and this is where I'm going to sell. These are the numbers that we have identified last week, and I'm going to save it and put it for you on your on the recording so that you can see it. Then Monday, this weekend, and you can watch it in the recording, and this, you come and take this number, let's say the dollar CAD. We have decided from last week that we are going to go long above 98.30. So you come to your chart like this. This is the dollar CAD, and this is what is part of our software. And you decide, and this is, for example, you see here my chart 98.30. See that? That was our buying point. Once we bought it from here, look at all the move that we got. Okay, so, and you put that also on your daily chart and you put it on your intraday chart. So whatever lines we put, you put that line on your intraday chart and you put that line on your daily chart, and as soon as it gets above it, your choice is either to buy or to do nothing. If the price is above 98.30, this means you are going to go long or step on the sidelines, but there is no reason for you to go short. Okay, and we're going to do that for every pair, and we're going to trade it like that. Okay, so with that, I'm going to stop this recording, and I'm going to open it for questions and answers, okay, while the recording is being done.